So as you know, I'm a stock market guy, and that's how I've made my living since 1984. And the first 3 years I was a floor trader. I was a clerk and became a floor trader on the Toronto Stock Exchange from 1984 to 1986. And one of the most important lessons of my career, and I still remember it vividly, was 1985. Now, if you can picture the Toronto Stock Exchange floor, there's a massive area where the traders would be, and all the trades would occur down here, different what they call posts or areas where you would trade different stocks. And then up on the sides, there's 3 tiers of desks and phones with traders at them. And the phones would generally connect you to the office or maybe to New York to know what's going on there or to place trades in New York. Anyway, I was a clerk with a pretty big deal, with a guy who was a big deal, and he was doing many millions of dollars of business, and I was answering the phone for him and placing orders and whatnot. Anyway, in 1985, there was an enormous chemical leak in India, in a place called Bhopal, India. Now, I have not done a Google of this, so this is very foggy in my memory, and yet it's very sharp. So some of the details may be wrong, but the story is very sharp and very real for today. Anyway, there's a chemical leak in Bhopal, and it was DuPont. So DuPont was one of the Dow 30 stocks. And this chemical leak was kind of outrageous. It killed many people. The fish were killed downstream. The chemical leak went into a river, and it was headline news for days. The stock was halted. Let's say it happened on a Tuesday, I can't remember, but the stock didn't open until the following Monday. So a 4-day halt is very long in the stock market. Generally a halt is overnight at the most, or an hour during the day. But the information kept coming out, and I'm reading it going, well, this stock's going to zero. I mean, these guys are gonna be sued. They've got no business. Their reputation is shot. It's over. Now, here's where I can't quite remember some details, but let's say the stock had closed at $50 on the Tuesday before the news came out. Well, and it was gonna start trading 6 days later on the Monday. Oh my God, it's raining, guys. I suffer for you. Okay, so the stock starts trading on the Tuesday, and before the open, you can see the price, what it's going to open at, and looks like it's going to open at $30 or $32. And I'm kind of thinking, well, how the heck can it open at that price? Because these guys are going bankrupt. They have no hope. But I'm watching the tape. It's very interesting. Don't know how it's going to trade. I'm a new guy. I got no idea. Well, in the booth beside me, there's a very seasoned veteran trader. He was probably 38 at the time, but he'd been through the wars. You knew it from the stock market wars and all the things that we go through. And I heard him pick up the phone to New York, so now it's like 9:27, the market opens at 9:30. He says, buy me 5,000 DuPont on the open. And I'm like, what? This guy's gonna buy it? And then about 40 seconds later, he phoned them again and said, make that 10,000. I want to buy 10,000 DuPont on the open. And me, and even my seasoned boss, he wasn't having anything to do with it. We looked at this guy and thought, you know, what the heck? Well, wouldn't you know it, the stock opens at 32 bucks. Within 17 minutes, it's at 36. He sold it all, made $4 a share, 40,000 US. In 1985, guys, 40,000, just like that. And the stock, you know, recovered, went down. But here's what happened. So it was in their India division. So the India division does not affect all of DuPont. They also have a great many lawyers. I mean, like it or don't like it, this is just the reality of it. They were guilty as sin, and yet they had the lawyers. They could stretch it out for a long period of time, you know, blame other things, take limited responsibility. I don't know, however the law works. But obviously it didn't put them under, because DuPont's still around today. They've changed somewhat. But this guy cleared $40,000 on headline disaster news. He went against the headline. Now, this has really served me well during any crash, during the COVID crash, during the 2008-2009 crash. I was in there buying it because the headlines are terrible. The stocks are reflecting the headline, which means they're opening low and they're hated, and it's a disgusting disaster. And as a smart trader, you need to be on the other side. Now, you don't have to go in for 10,000 shares, and even today I wouldn't do that what that guy did. He had big balls. But I might go in for 2,000, and if it went lower, I would add and then sell on the almost inevitable rebound. So it's a great story. When everything looks bleak and there's no hope and your stock is getting hammered, as long as the balance sheet is strong, it's not a mining company that's, drilled a dry hole or is, searching for molybdenum in the Congo. As long as they've got a real business, probably there's a recovery in store, and the bad news is baked in to that low price that you're buying it at that morning. All right, that's some stock market wisdom in the pouring rain in Toronto in August. Thanks for watching. I'll see you in the next one.